Hello everyone. The crypto market has been buzzing non-stop over the past few months. Bitcoin ETFs, Ethereum ETFs, new applications, billions of dollars, news, headlines, discussions. It seems like the entire market is revolving around this right now. But at the same time, not everyone fully understands what this is all about and why it's getting so much attention. In this video, we'll break it down. What is a crypto ETF? How do they work? And why is this really important? An ETF is an exchange-traded fund. Simply put, you're not buying Bitcoin or Ethereum directly, but rather a fund that already invests in them for you. In other words, you don't need to set up a crypto wallet, you don't need to store private keys. Everything happens through a regular brokerage account. It's like packaging crypto into the familiar format of the stock market. And that's exactly why ETFs are so important. They open up the crypto market to large investors and everyday people. In January 2024, spot Bitcoin ETFs were approved in the US for the first time. Several funds entered the market at once, and on the very first day, they attracted about $4.6 billion. It was a real explosion of interest. Among the largest Bitcoin ETFs today, funds from BlackRock stand out, namely the iShares Bitcoin Trust under the ticker IBIT, followed by Fidelity with the FBTC Fund, ARKY, Invest in Partnership with 21 Shares, ARKB, as well as Bitwise with the ticker BITB, and VanEck with the HODL Fund. All of them invest directly in Bitcoin. This is what a spot ETF is. In the summer of 2024, the SEC approved Ethereum ETFs, and in just the first week, they attracted over $1 billion. It's important to understand that these ETFs also hold ETH directly, but they don't provide staking income due to regulations. When it comes to major Ethereum ETFs, the funds from BlackRock, Fidelity, and Grayscale stand out first and foremost. To put it simply, the difference here is quite straightforward. When you buy crypto directly, you have full control over your assets, but you assume all the risks and complexities. With an ETF, everything is much simpler, but it's no longer direct ownership. It's an investment through a fund. And this is where it gets interesting. After Bitcoin and Ethereum, the market is gearing up for the next wave of ETFs. Funds are currently being discussed for Solana, XRP, Litecoin, and even meme coins. And there are already hundreds of such applications. Plus, ETFs are emerging that include several cryptocurrencies in a single fund. In other words, the market is becoming increasingly traditional. Crypto ETFs are a bridge between crypto and traditional finance. And while crypto used to be for the in-crowd, now banks, funds, and billions of dollars are entering the space. And yes, the market has already changed. The only question is, have you noticed? I hope you found this information useful. Don't forget to like, comment, and be sure to subscribe to the channel. See you in the next video.